Hi guys, today we're going to be talking time analysis, charts, and a nice set of proper trading tips and tricks that's going to help you level up your game. Now, the reality is what we do is as traders, sometimes after we've developed our strategy and we've looked at things, we kind of find a way to simplify things. Now, the way that we would normally do that is by building an indicator, as I have done that with my buddy indicator. Kind of helps guide me and remind me of things that I need to be looking at. And today's special guest is somebody that's done exactly the same, has gone through an extensive amount of education, learning tricks of the trade that is normally not being used by the average Joe, which means it gives you a really good edge. And what he's done is he has taken that and moved that and coded that into an indicator. So we're going to be looking at that indicator. He's going to show us and explain to us how it works. And then from that point onwards, we're just going to go full hands, let's put it like this. No limits, no nothing. We're just going to educate you guys as much as we can. So Renee, Jerry, and anybody and everybody else joining in live, sit back, relax. This is going to be a big one. So let's bring our friend in. Joe, not Joe. I was thinking about Joe.
That's all right.
Captain Blackbeard, how are you doing, my friend?
Good morning. Thank you for having me. I appreciate it. It's nice to get some of this. It's nice to get some of this off my chest and out there a little bit. You know, sometimes it's hard to explain, and I've had lots of people ask me to do videos. I just haven't had the motivation to do it, only because I feel like it's overwhelming. But after having a couple conversations with you and doing this with Joe, I see that I don't have to go crazy with it. I can show the basics, and it's my idea is to just show people that if you use the right formula and math that relates to trading, that there's many ways to skin a cat. There's lots of ways to trade, and this is a different system, so you just kind of have to keep an open mind. I tell everybody that.
That's it. So a very nice intro, Captain Blackbeard. So guys, I see we already get somebody. Thanks for the education, and let's get into this though. So I'm gonna just quickly, just to break the ice. It's two guys just talking charts. Just gonna break the ice and put it like this, guys. So my system, or the indicator that I used, not to turn this into an education on the buddy indicator, works on the premise that when I trade, and I'm just going to put it like this, when I trade, I'm expecting the market in an impulse to have, the best way to explain this, 5 waves to the upside. That's it. Simple. Now, most Elliott traders will say, well, then there's certain rules that the market needs to adhere to, like what 4 can't go below 1, and those kind of stuff. You all know this, Captain Blackbeard. You probably know this as well, correct?
I'm familiar. Yeah.
Oh, okay. But once you start understanding momentum, now you're looking at that impulse and you're looking at the RSI. What I found is that there's certain special relationships. How a 1 typically looks regarding an RSI. It would normally be an impulsive move from the overbought side to the oversold side, or vice versa. And then normally the 1 won't be at the tippy top. It would be when strong bearish divergence occurs, meaning price goes and makes a higher high, the RSI doesn't, and then we retrace. And at that stage, you'll create a 2. So a 2 will then have a low on the RSI. And then if this is an impulse, what will typically happen? Now you have another 5 nice waves to the upside. And funny enough, around level 3, what you will have is the RSI doing something like this again, giving you strong bullish divergence, bearish divergence, making lower highs as prices making higher highs. And then your 4th wave will then also be picked on lows. And then I found that there's a relationship between where 2 would be normally on the RSI and then where 4 would normally be on the RSI. So you will have hidden bearish divergence between your 2 and your 4. You'll have strong bearish or hidden bullish divergence, sorry. You'll have strong bearish divergence at the 1 and at the 3, but you will also have it there and there, which is the problem now. How do you navigate all these divergences? Because technically that's the end of the wave, and then that's the end of this wave. But to know which divergence to take serious, to not get you out of the good moves. And then at the end, you'll also have divergence between the 3 and the 5 at the end, and this would be a first wave on a higher time frame. So there's many of these divergences, which basically spark the idea with the buddy indicator. To simplify this, so you know where I'm at, is to say that if that is the case, there's a specific trade setup that I would use to identify these highs, and that I've called strategy 1. So that's just listed in the indicator as strategy 1. Then, while the market is trying to figure itself out, because it doesn't, like the Elliott wave, like I've drawn there, move in a straight line, make trading so much easier. You're going to be range bound. You're going to have moments when the market is trying to turn around. So you'll have a lot of the sideways chop. And that is how Strat 2 is formulated. So it's a reminder that we're in that environment. Consider taking a Strat 2. Okay. And then when you break out, so say you've got your range bound now, that's zoomed in there, and the big move happens. That normally is Strat 3. So for the buddy indicator's point of view, the argument is now that we're breaking out, you want to get in with the momentum, be it to the downside or the upside. That's Strat 3. And then Strat 4 is literally, you've done a wave, you've retraced, you've done a wave, you've retraced. Now you're looking for that last wave. That would typically be your Strat 4. And you will have Strat 4 there for the continuation of that wave, and you will have another Strat 4 there, and you'll have Strat 4s there and there as well within the wave. So the buddy indicator, because there's so many places the same setup can occur, is designed to help you, just remind you of where the strategies are and what you need to be thinking, and to help guide you not to get lost in the trend direction. Because now, what if the buddy gives you bearish signals now? This doesn't mean that it's a bearish trend. What I've done is I've created the candle override feature that basically just tells you whether we're in an uptrend or in a downtrend. And that then brings how my method was behind my indicator. That's the simplest way to try and explain it to you, Captain Blackbeard. Mm-hmm. So that was just so that I then can easily, if I have to take somebody brand new to trading, I can say, well, I can help guide you getting on the right trend easily. Because if you then use the buddy indicator, you switch it off. Let's say you don't want to trade just yet. You just want to learn whether we're in an uptrend. So let's hide all the trade strategies. Okay. When do you want to enter the market is when it starts turning blue, because now it's explaining to you that it's an uptrend. And it will keep you in the uptrend for as long as we're in an uptrend. Now, obviously, any strategy, as you would know yourself, you have to give back a little bit to find out whether this is in fact or not. And the same then will also happen for the top. You have to give back a little bit. And as we as traders know that's where you make money. It's actually in the middle of the meat, where most guys, when they start off, they think they need to be hunting this and that. But that's not the case. This is where the juice happens. So in doing that, it then allows you to trade with the momentum of the move. Then if you start layering in the strategy, it means that if the candles are blue, so we add the strategies, don't try and short the top. Don't try and be the contrarian on each and every move, because then it means that you're just basically always going to lose in any case. It's just, you're going to lose when the other guy wins. So that's what it means. Which then helps you to understand that, well, ignore the orange Strat 2s, take the Strat 3s, the blue ones, which would say enter at that level there, with the overlap. In this instance, it didn't fall. There's limitations to that. There's a Strat 2, enter on the wick overlap. There's another Strat 3, enter on the candle overlap, and so forth. And that was the idea. And then when we start turning bearish, what do? You enter on the bearish setups. And then what I did later on was ladder in a few more levels, considering on Fibonacci ratios what statistically would be the areas where the price will go and hit most of the times. So if you've got a strategy and you enter within the purple range, the buy zone, statistically price will go there most of the time. And then your long shots would be TP2 and TP3. If you enter on a strat 3, which you shouldn't, this is now fighting the trend, your entry would still be in that area. So that candle fits the narrative, but it's fighting the trend. So you were lucky with this one. Enter between the purple TP at the 1, but wait until the trend becomes bullish before you look for the bullish setups, And then this then makes it easy for you to navigate price and just remind you what you need to be looking for as a good example on this. So that was the method behind my madness, if I could say that. So over to you now. So what I want to do is quickly show the guys your indicator and show them, what it looks like when it's loaded by default. So here's your indicator by default. So briefly explain to the guys, and if you want to share your screen, I think maybe that would be even better. What was your initial thought process on the why you created the indicator?
Well, I was seeing I did a lot of research on time and price and balance and equilibrium. I went through Fibonacci and Yan and a lot of stuff. I just, and the weird part about me is like, I at the time it wasn't good for business because I probably should have picked a system that's already works really well and just spent enough time studying that. Like I wish I had just done, well, in some ways, I wish I had done Ichimoku or, something like that and thrown all my energy into it. But I had people that I trusted that did well in trading, and they were like, they gave me all the wrong advice. It was, I don't know, they must have made really good money during the .com bubble or something. I don't really know. But I kind of went at it and I was looking and I joined some groups and it was like they were talking about geometry and they were talking about a lot of little things. And I started to get kind of obsessed with algorithms and how algorithms work and how orders get filled and a little bit of conspiracy theory thrown in there, on how exchanges somehow stay in sync. And a lot of people say it's arbitrage and it's, the market doing its thing. And I don't necessarily believe that. There's a lot of stuff. And so there's that. I've said it before on other streams that I don't necessarily trust the volume bars a lot when it comes to crypto. I do believe that there are some really valuable, like I do in a way, because it's where at very minimum, something happened where they want you to know there's interest or participation or, volume, if you will. But I don't necessarily, I think I'm still old school where there's a lot of wash trading and things like that. Anyway, I got into seeing how orders were filled and where they were filled and how order books, it goes a long way. But anyway, I guess my point is, without giving away too much, because I'm still working on this and a bit of it is proprietary, there are points in time that hold the perfect balance with time, price, and actual price action, and where a lot of conditions are met that are just really good waypoints or coordinates that are meaningful and they hold a lot of data. That's the best way I can tell you this. And then they don't happen randomly. I'm going to show you how it works. And so by identifying these nodes, this is just one of my indicators, but this is the one that seems to be the most popular. I'll probably, if I have time, I'll go over some others, but these nodes, they have a meaning and they connect to, like, let's just call this the anchor node or the parent node. And you could say this is the second node in that series, which builds a trend. Okay. Now, the art of nothing good is easy, right? That's what I always say. Like if something's good and you're fighting against like trading quants and all these other things in the market, it's not going to be easy unless you know, and AI will make it easy someday, and hopefully I can hook this up to that. But these trends you see will resonate through the entire cycle in some form or fashion, in some way. And I made it to be kind of a hybrid indicator that you can use multiple tools on to forecast price action, pivots, lots of different things. And you can use with other indicators. I have other indicators that I've built that I can't get into today because it would muddy things up too much. But I use this a lot for Confluence. And I share a lot of these charts because even though they're noisy and busy, I always find them fascinating. So they call it barn blind. Like every horse in your barn is the most beautiful, wonderful horse, and when you go to sell it, you always ask too much for your livestock because you just think your stuff is great, Well, I'm that way. I just think it's great. And then I share it. I share my charts and people are like, what the hell am I looking at? What are you even doing, dude? And I'm like, so it's a good opportunity for me to kind of show a little bit, like some of these things, like for example, like I've been talking about the weekly and I can show you guys. I don't know which direction you want me to go from here, but I can show you.
Let's unpack the nodes. Let's quickly unpack the nodes so that the guys can kind of follow with those points, and then we'll build on that, like you said.
Okay. So when these nodes do appear.
So those are for the viewers, guys. That's the dots. So you'll see the green dots and the red dots on the screen.
Yeah.
And the trend lines that you're talking about, they get drawn between the nodes.
Correct. Yeah, I'm going to go ahead and make the nodes a little bigger so people can see. It does make it easier with precision later on when you're trying to align things. And within that, I can tell you that there is a part there is some pattern recognition that happens, and you'll also notice that I use really odd indicators that uncover for me some background data, some stuff that's in the background hidden stuff that you don't normally see. Because I'm also a believer that everybody is stuck on default. What they serve you and on every exchange is 4 hour, 12 hour, daily, weekly, and I'm, 45 minutes, 30 minutes, 10 minutes, whatever, so on and so on. I always think that, and it's a fun thing to do if you ever have a chance, is go and throw in some odd numbers, some 23 hours. I love multiples of 11. I like anything that can be divided by 11. I love 11. 11 as a rep unit, 1, 1, 1, 1, 1, all those things. That has to do with order books, and that has to do with filling orders. And if you look at how orders get filled and priority and all this stuff, we're talking about trading desk and all these things. It goes a little deep, but it's an interesting thing. And I built these nodes based on that, on how natural they are to price and time, and how they fit into history and cast into the future. And it's like I said, it's hard to explain. Everyone wants to kind of know that. I talked to Joe about it, and he said, just do your best job explaining that they're important and that they hold balance. They're the perfect, they're perfect for that time interval that you have on that chart, and they're going to give you some good data.
I just wanted to, the way that I said it to explain it is it's a magic button.
Right.
And a magic little dot on the screen, because in the end of the day, it's like my buddy, there's 65 processes in deciding whether the thing's going to turn the candle a different color to take you through each and everything. That's why the indicator is there. So we don't have to dive into the magic, but the dot is there, or the node is there, and that's magic in a way.
Right.
But now what we do with it is where the real value for us come from the user point of view. So looking at those nodes, when you have nodes preceding each other, like on the left-hand side of your screen, you've got 1, 2, 3, 4 blue nodes and no orange or red node between that. What does that mean, and how do we use those nodes then going forward?
Okay. So this I would call a cluster. Okay. So the first thing I would do, we should see if I can zoom in even more. So this little cluster is meaningful. It's kind of like where you can see, let's just say something is working in the background to find balance as much as possible. Let's just call it that. Okay. Let's just say this is an area where it's very important. And I've always considered this an area that was very make or break for Bitcoin. It was I don't know if you've studied it or looked at the volume and all the other stuff from this, depending on where you are. But I always this point right here will show up on so many of my charts, no matter what interval. I can remember trading this. I can remember thinking this is a 50-50, this is a 50-50. And it was. And when it decided, it went for it. It was a fork in the road. So I would say that that's a very important area. And now you see the weird part is that these are all under the price, and it just kept tapping it and tapping it and tapping it. Now, the other theory I have is that it's doing this because of the move that it's going to make, and it wants to attach itself to the center line or the meat and potatoes of many averages and many indicators that are probably hitting there. And it could have been people, finding balance and buy, whatever it was. It's hard to describe, but let's just say that it was just decision time. So what you could do is measure this out, make it a center line it, and use probably the center of that circle for its own like master node. I've done that before. And other things of the sort. But because it didn't have, well, this is on a weekly, but this would be a time where I start seeing these print, and I would probably go to a lower time frame and look at what's going on in the beginning, like from a smaller zoomed in view. That's how I would look at it.
Okay, and then if you're looking at the nodes past that one red node that you've got there that was below it, so let's take this now and maybe move it to where we are right now. Let's have a look at Bitcoin where we are right now. And looking at the nodes, so we understand that when you start printing a lot of nodes in concession, that is then something to take note. So reading Bitcoin where we are right now in the weekly time frame, we've got one last node sitting in around 26,000 from a bullish point of view. And then from that point on was 0 nodes until the first one now that's sitting at around just above 90. So what does that tell me if I'm using the indicator now and I'm looking at the two nodes? What is the value that I need to pull from that?
So I'm going to consider this. Think of this as a very important one, like almost like a one-to-one line that was extremely important to break. Like you didn't want it to break that, but if it did, you want it to kind of, you want it to stay close. You would now at this point, this is what we're hoping for, right? This is kind of like what we're hoping for. If you're bullish, you're looking for something like that. It's essentially now I have this set right now. This is another level, but right now I have this set to close. I can go to low.
But let's leave it at that real quick.
Okay.
The one-to-one line.
Okay.
Because I think there's a little bit gap that we just need to make sure that the audience kind of gets it to go with that. So I'm going to bring up my screen just real quick. So when you look at a Gann analysis, it looks like if you draw enough lines, you're going to be right. That's what the first impression is that everybody's saying. But to simplify things to what you were pointing to out now, guys, is that when we talk to a one-to-one line, so this is a typical Gann box. And the idea with Gann is that we're trying to define how price is going to move. So this would be time, and then this would be price. You've got two axes. And a one-to-one would mean that we're moving for the amount of time in relationship the same amount of gains. So you've got a one-to-one line. And according to Gann's strategy, any price action above this is to be considered bullish. And when we start breaking the 1-to-1 line, we need to think about the bearish side. And then there's additional ways where you can have like a 1 to a 2 to a 2 to a 2 to 4 ratio at this stage, which means that the momentum is stronger, or 1 to 4 ratio, which means the momentum is extremely strong. And although it breaks through these levels, it means that it's going to catch price at a later stage. So it allows you to kind of measure momentum very, very aptly. Now, the problem is applying the Gann box. And I think that is where the indicator now becomes really powerful, because if you've got the 1-to-1 line that is shown there, so looking at this price action, using that as the 1-to-1 line, it is easy then for you to move forward on the assumption that if we're above this, we're good. If we're below this, we need to worry. I think that would be a simplest way to try and define the 1-to-1. Would you agree, Captain?
Yes, I mean, yeah, and people who really know Gann are going to either love this or they're going to hate it because they're purist and they think this is so irrational. Because I'm basically I'm contorting some Gann stuff only because the Gann math works so well with so many different things. The formulas, the way things break down and they capture price, it's just so natural. It's a beautiful thing. So I use a lot of Gann fans. Now, I will say this right here is a 1-to-1 that is, you're going to look at this and you say, well, yeah, now I'm drawing this. I didn't have this before. You see what I'm saying? But now I do. And so that's still valuable. And this candle has not closed yet. But since this candle is so tight right now, I hope that this node will stick, but it could actually change by the time that this closes, because this has been sitting there for a couple days now, I think 3 or 4 days. No, actually this candle is the 5. Yeah. So it's a couple days. Yeah. A couple days. This node is new, but it's showing itself right now. Okay. Now the people that follow me and we chat and we talk about the indicator, the people that use it are excited about this, and people who know are say, don't, mark it and lock this spot because it is meaningful that it's showing itself right now. And it's allowing us to kind of make some plans and do some drawings off of it. But it is an important level. So there's no way I'm going to move that. I would lock this line in and mark that as something that's important. I think it's going to stick. That's just the way I think it'll stay. It would take a lot of things happening for that to actually change its mind. Change its position. So anyway,
one thing I want to add to what you just said, because you're only getting it now. The
right.
thing is, guys, I did this earlier, is everybody wants to be early to the bull market, which nobody gets to be, because we cannot know that bottom is in fact the true bottom that you've had there at the bottom at 15K. But as the bull market forms, new people join. Everybody's always on time for the bear market, but they don't believe that it's there. So if that is the node that it locks in, it allows you your first measuring point to start positioning yourself from a bearish perspective, which is really good going forward. So you might feel like, that's now a little too late. But from looking at it from a different point of view, that then sets you up to position yourself accordingly. Okay, so there we've got that little node now. So going forward with the node, what do we do?
Okay, so
let's say it's there.
I'll just say it's
locked
there.
It's locked in.
The first thing I would do I would build a chart and I'll show you something else that's going to confirm a few things later on. I would build a chart like this. Now this is going to show a wide open range, and this is a weekly. So it's not crazy to think that if we don't hold this, there's going to be some room. This is what everybody fears. This is, but you're going to see a lot of people say 55. I promise you. Or, somewhere in the 50s.
Oh, I'm already getting 52 from a standard Gann analysis.
Right. Yeah.
Probably the area.
They're going to see that. And so this is giving you some pretty big extremes. Now, that's why I say the 1-to-1 is important. Another thing that you can do that kind of muddies things up, and I hope people stay to see more of what I'm going to show you later, because we're working on what the price is giving us from a local standpoint. Okay, now you see I just used this node trend. I did an alignment. I like to use precision because it really removes a lot of bias, because sometimes you have a tendency to wiggle things in your favor. Okay, now you can't tell me that that's not a meaningful trend where it popped here and did this, right? It doesn't take a genius to do it, but look at the confluence I got here, the confirmation I got here, right? That this is an important level. This is why I've been saying this little zone right here is extremely important. We have a double trend in this holding this thing up. So this is everything. And that's why this will also be, and I took two GAN fans from two different spots, put them at different pitches, and you see how they're kind of jiving in the same direction and giving you like a flow, right? So with that, and this is a little different because we're talking about something that hasn't really printed yet, this node. Okay, so when it does actually print, you'll know. I mark the intersections. This is going to be, I mean, if we're here, we're gone. We're dead. This is death right here to me. I mean, like, who knows what'll happen. I heard somebody talk about it yesterday and say, if prices go to this level, it probably means like World War III or something. So, it's like the last thing you're going to care about is that. But so from there, you can do a lot of cross-referencing, which I will show you later on a clearer chart, and it'll show you a little bit more of how I did it from a predictive model, like predicting out. And I'll show you one that I published where I did that. So this is just giving you the first part of it. Now you don't have to. This is not showing a ton because this is just a brand new line that we're dealing with right here. And that's okay. That doesn't bother me at all. In fact, I'll go down on the color here just to make it a little bit lighter or something. That way we can at least see the difference. I'd like for people to still be able to see it on your screen, but okay, so that's all we're getting. That's no big deal. I'm not worried about that. When you turn on your other indicators, it's going to give you something that you can kind of bind to. Yeah.
So let's pause what your train of thought here, and then just recap this, because I want to make sure the audience is with us, and I want to make sure my understanding is 100% correct. So I'm going to bring up my screen and then do the same thing again. So the problem that we have with GAN fans, guys, is they're extremely powerful. Okay, the trick that I use with the GAN fan, where you track the highs, and as long as we stay within the fan, you're good. And once you leave, you drop. And that's basis on a lot of what we just saw applied. The problem, though, is when you're sitting right here and you don't have the nodes or anything to work from, it means where do you then get the true 45-degree or the true 1-to-1, which is what the point and figure chart kind of fixed for me. So I use the point and figure chart with the true 45-degree to know where we're trending bearish, and the true 45 to know when we're trending bullish. So that was my workaround. So what the indicator is trying to achieve for us is, by looking at it from a mathematical point of view, it gives you the ability to get to that for what is happening right now. And I need to get a normal template, but I don't have a normal template saved, that the degrees for the GAN fan. Okay. And that's basically where we're at right now. So taking this then further, I think I'm using the wrong one. I can probably just use the GAN fan. There we go. Come on. So taking this then to move forward is now applying the fan. Where is my fan? You see, I'm selecting the tool
I do.
And it's either the line's already
It's
black
super dark.
or
Or,
I've just switched. No, I switched everything off. There we go. So there you go. There's my little rainbow
I love it.
fan. There we go.
I don't know
Got
how
it there.
yours
Okay,
looks better than mine, but I think I need to go dark mode.
so there it is. So now I've got the fan. I understand where areas of resistance are going to be, and then if we reclaim that level, where the next area of resistance is going to be, because that's basically what Garn is looking at. Price will always adhere to a trend into the future, space and time, and so forth. So the argument around that is there, and if you use the node instead of trying to figure out, because I mean, if you're sitting right there, which level to use, it leaves it open for interpretation, and like you just said, now you can fudge the analysis. Oh, I want this to be bullish, so let's just move it up, and then it's bullish again if it breaks through. Because now I can just say, well, let's use that. And then, no, we're bullish, man. This is how you need to draw the Garn fan, and
Right.
and so forth. So it takes away the arguing that we can have between us, whether it is up or down, because it's mathematically gives you the pinpoints, and then from that point onwards, just a reminder, as we said, with the basis of a Garn box is the argument being, once we have a 1-to-1, we're still okay. Once you start falling below these levels, we need to worry. If we stay up this level, momentum's getting strong. So back to you then. Did I sum it up correctly?
Yeah. It's very good, and I think that's the right amount of information people need, because if they, like I said, if they knew too much about GAN, they might turn the channel off, because we're bending some things. That's
Let's
good.
bend it. Let's bend it.
Yeah.
That's fine.
Okay.
Let's bend it.
All right.
While we're bending it, Bitcoin is coming down, and because everybody was too bullish. I just had in my Discord, guys were saying, why is everybody so bullish on Twitter all of a sudden? And because of the CPI or the PPI information that came through, and now Bitcoin is selling off, moving into hopefully my buy zone. So let's see. So multitasking like crazy here.
I'm with you. So this is unfolding pretty nicely, because I'm gonna be able to show you what these two fans can offer. Okay. Now
going forward,
this is gonna be so natural to time and price. Do you see how I marked this? This is like the very now.
Okay, so those markings are now your area where the two versions of the bull trend is basically crossing. Correct.
Yeah, correct. I don't know why I probably should do blue just to make them different colors, I guess.
Yeah, blue sits nicely on the screen.
Okay. And then I'll make this one, just make this one straight black, and I'll just ramp it up. Okay. So you see where these two join. I marked them, and now I will tell you that this is also, if this thing moves, then it's a whole nother story. But right now you can see that's an important level. Now it's like you said, we're not going to be, we would have had this fan already, right? Right here, we would have had this complete trend. It's already printed. So this one, it would have been really the first one, but since we started talking about the new node that was there, we'll go that route. But I would have been able to make this trend. So now that I got the other one, we're just going to use it to see if, like, hey, let's just check and see if this is a valid trend. Okay. Now I marked this intersection here. Now the cross-reference part is the part that loses a lot of people. So I'll try to do my very best to explain how I see things. Now you see where that line comes through and intersects with this, right? I wouldn't say that I would build a chart off of this little bit of data right now and like trade on it. But until this is confirmed and there's some other things, I would add more to this to add more confirmation, but that would get really noisy. But I will tell you that these right here, see this right here? See the line I'm making right here? If I just should drop vertical? Yeah. So I'll do that. I'll do that. Where is it? Right here. I'll just mark them. Here. Here. And here. There you go. Right? And that's just off of that one. Now it's going to be a little more. Uh, it's not going to have as much info down here once you get to that. Now I can start marking these nodes because remember, they're important in time. They're important points in time and coordinates that you need to just always understand that they're valuable, and you'll do fine. You just understand that you have to take them into account. So you could then mark this and see if any of them also align. That's one of the first things I look for. I'll mark it. Now, you see how this one also intersects here. We have something new right here.
Can you maybe zoom in a little bit? Just make the screen a little bit wider so that you can see it nicely on the screen.
Yeah.
Okay.
So that actually helps. This is the first intersection for that, and we're going here now. The other part of it is people see these and they're like, oh, but you were like one candle off. Well, I don't look at it that way. I've just trained myself to say, like, on a weekly chart, it could be 2 to 3 days on either side, which wouldn't necessarily, I would have to cut something in half almost. So I usually just make this like a zone. I'll take like 3 candle widths, and I'll make this a whole entire zone, or I can start making heat maps. And the chart gets really busy. But I have people who ask me, they said they'll buy. I've had people look at some of the heat maps that I have, and they're like, I would literally pay you for one, because it basically I use different colors, and I start categorizing these intersections in different colors, and sometimes some will be dotted and whatever, and it basically breaks apart zones into the future that if I can find the chart, I'll pull one up for you, where it's basically showing you a vertical heat map, a pivot heat map of price action, and it cuts it right in half. Now, considering that this wouldn't be my ideal setup right now, to trade off of, I would probably have to bring in some things from the past, which this is where the real stuff comes in. But it gets really busy, so it doesn't make for a good stream. But I will show you something. Another thing that is adding to my. This line, like I mentioned before, has. See how that? I just aligned it here, right? Look where it goes. I'll just make it like that. There we go. Now, tell me that's not a beautiful, like, I see, if you saw that without all this on here, you're like, that's simplicity, that's beautiful. It just jives well with what you like to see. It's nice. It doesn't have to be so busy. But this is why yesterday on the stream, I was saying my system told me I need to pay attention to this, because I've been trading this line for a while. This helped me here. This helped me here. I saw it in a different way here, but it just added confirmation. And because at this time, this double top it kind of petered out, and you could tell something was going on. So I think I'm with you. For me, it's never been a tippy top. It's harder for me to catch than it is for me to try to catch a bottom. I don't know what that is. It seems to always go over a little bit, or maybe something to do with my emotions. But a tippy top is just really difficult for me,
Tippy tops are, well, the thing is, once you're in the move, the momentum is there. So typically what that does is tops will always look bullish. Simple
right.
as that. When we're at the bottom, most people will be out and looking. So it is different trading tops than trading bottoms, I would say. You have to have a little bit of a different mindset.
Right. And to make things, I also look for these where the price just looks like it's just at a nice, achievable pitch. I like the ones that are almost flatter, because that means, like, hey, this is something that is being worked on. This is where price. This is something that is not parabolic or unreachable. I just love seeing those because it just looks good. I mean, and if you look at it, where that went, so things are getting a little crowded. I'm going to take these off just to show you where we're at here. So from this trend in November, if I was to hit the replay button and play that, you would see just how meaningful that really is. If you can envision or picture what it's like when it's making this uptrend here, bouncing off, building pressure, things are contracted, contracted, and things are looking, and then you see it break that. This is something that I wouldn't be like, oh, I'm going to wait for a retest, And then remember when I was talking about wedges yesterday, like filling gaps and voids and stuff within that, and some people don't look for.
A lot of people don't understand the gaps. Once you're done explaining this, I'm going to take this over to my trade system.
Please do.
Then I'll see if I can shed some more light for the viewers on that as well.
Now, here, if I put this on a lower time frame, you would see this, right? You would see this and be like, oh yeah, I could make some kind of wedge out of anything, and I always think it's something building pressure between two trends. And if I wanted to, I would find one here that would probably capture this in a more, steeper angle here that would actually probably even pinch right here naturally with a different node. I know I can find it, I probably have one saved somewhere, but go ahead and give me your thoughts on that, and I'll finish with that.
Yeah, so let me then take this. So here's my screen. This is basically where you were drawn up to this point, and I want to bring the audience's attention to this chart. Now, what this chart does is, in the way that I draw these lines, it's not, when it's drawn out, it looks like realistically, all that I did was pick up lows and draw a line there. But the power is that these angles get created when we were here. And I have never moved the angle of these trend. And through the entire journey of the bull market, I use these angles in relation to get the sell zone there, the buy zone there for you guys. This is all the calls that we made on YouTube, and the missed buy zone. That buy zone there we missed at 30,000, and so I had to buy a higher level. And then yet again, the sell zone, the old buy zones, the old sell zones, how I'm using that. And the reason I say this is because typically drawing this, when it's done like this, is so simple. You just pick up lows, but it's almost after the fact, so it doesn't really help you much. And the beauty about your angles, I'm going to show you now the chart on that is it's a tool to help you get this axis, this natural point at which price is revolving around. So what happens is, if you look at this level here, price is revolving. It's trying to stay above the axis. Once it's lost, it goes and looks for demand. Once it reclaims, it will enter back into supply. So the natural frequency of how this is moving is you're in a point of supply, then you're going into a point of demand, then you go back into a point of supply. And the rate at which the increase of or the interest or the growth in price is encapsulated by this. So you know now by what time it's going to be moving up, and you know where in the future to catch it. So we use these highs to kind of predict where the top would be. So I used GON and a few other things, and that's how I got to the 125, considering the trend and everything where we're at. I've done many YouTube videos on that. And the gaps that we were referring to is when you have something that falls very fast. So now you see price moving really fast in one direction. What it means is once it starts picking up your line, it needs to go full that with proper price action. So you'll see, if you start zooming in on this, that the area where the loss occurred is probably the area where the resistance will always be in the future. So now you can lie in anticipation and wait. The biggest power trading is patience. Now you can wait for that to happen to start acting onto your next move. And that's something that I basically learned from point and figure as well. So there you had the market move excessively to the upside. So what you do, you know the angle at which demand is going to be. You know when price is going to try and recycle some of that move. And now you just wait for that to pick it up in the future. And the beauty is that line, like I said, I've now moved it from wherever it was. Oh, sorry, let me just do this. I've moved it from wherever it was up to that level, and that is where the confluence then occurs. But realistically, if I were to look at that gap there, when price moved through it, it will test it. When price moved through it, it will test it. So there we gapped again. So price will at one stage go and reclaim that. So those are the gaps. So if we now take these gaps to what you're showing us right now, and we look at those lines and say, okay, right, I've got a whole system in creating these lines. I don't need that system, because in the end of the day, now if I start doing that same application, looking at where price is going to move, the rate at which time and price is being affected by these allows me to easily then look at the market and spot the confluences. So now you can say to yourself, if this is the adoption what we're looking at, this is where supply is going to be entering the market. Every time we get to those levels, supply will enter the market, which it does. Where will demand enter the market? Every time we get to the last time demand entered the market. So you want to buy these areas of demand, you want to sell these areas of supply. And as the market is so kind, it overcorrects. So once you move out of these ranges, you take note of the bearish divergence and you take it seriously, which means where we're at right now, considering the system and the simplicity of the nodes, it's telling us that if we're in an area where we're going to have another attempt at highs, this would statistically be a good area. And should we fail, this would be the area that's going to bring price back into where demand was originally for a test. Now, the problem with the logarithmic nature of price is if I do this and we look at the way it is, now you can't apply it realistically there, you would say. But if you zoom in, guys, and you say, okay, right, let's ignore this real quick. I'm going to move that line over. Let's ignore this real quick and start zooming into this price action. What you're going to find is that although the rate at which this is moving again into the future, let's just switch this to logarithmic real quick so I can get the line in there. There we go. So although that is still the same, now you can see if I apply this back onto the nodes, look at the confluence on the levels, look at the confluences on the highs and on the lows, okay? Where demand, supply, where was demand? So you're looking at the areas of where was demand. So the nature of Bitcoin at this stage means that from a Gantt perspective, that angle, those important levels that the indicator is basically creating for you, will always be there, and it will help guide you from a pure expectation point of view. Meaning, if we're there and we're rejecting, don't expect that. Like people were calling Bitcoin $250,000, $300,000 when we were at the upper end of the node, because it's telling you that although if enough time goes by, we will get there. We need more time to go there. We can get there. It just tells us where we are right now. Not enough time has gone by for that to be realistically achievable. So now you know, time-wise and expectation-wise, because if you know time, you know price, you have an expectation, what to do and help guide you through the market. So that's the beauty. And because we have this gap all the way back down like we had there, your expectation would be this is to be taken serious. And at some stage in time, we will be back at 110, and there will be guys on this channel that jump on and say, because you're selling, you're wrong, because we're going to go to 250 now. And I'm not saying that it's not possible. I'm just saying the expectation is where we're at supply means that it makes more sense that we first need to find more demand before we can go and achieve additional new crazy highs. That's it. So that is how I interpret the angles and the gaps of your indicator. And I think basically what you're trying to point to, I mean, the beauty about yours is you can have multiple angles, multiple directions. So it opens the door for more and different time frames, because this kind of limits me to the weekly and this specific time frame. Correct?
Absolutely. I've always been a fan of looking at things from an angle. What happens? What happens here? So this has to do with, for me, with like velocity or momentum, right? The push here at 63,400. Impressive. It hit the top here, and then it hit the top again at 69. There's what, a $5,000 difference between here and this little space and this angle. But this you would be able to get something like this and trade this. I mean, this is just one simple channel that you could pop on here and trade. I have a tendency to want to move things around a little, align them with other nodes, but you could just simply copy and bring it down, and there you go. Voila, look. I mean, this right here pretty much captured this entire bottom on its way up. And
this will help guide you to know when to have confluence for a bearish thesis. So when we get to 120 perhaps, and we're sitting at one of those critical resistance lines drawn in the future, it's going to help you to understand, hey, maybe I should not say hold indefinitely thinking that this is going to go to 250 or 300,000 for that matter.
Yeah. I mean, that's why.
Or buying the bottom. Sorry to interrupt you again. Or going to your box there. And now some guy says, no, but we're going to go to 3,000. Okay, now you want that to happen. The reality is, if we were to go to $3,000, there would be something momentously wrong. I'm not saying that it can't happen, but it allows you to kind of have a good expectation of where proper bottom needs to be versus a proper top.
This is showing you this, and I haven't really run a channel on here in a while. I'm sure I have charts that show it. But showing you this is exactly how I would love to trade it. Everything down here gets more attention, and everything down here is like, I'm going to put everything I have into it. Because this is the new trend. This is the new line. Look how it caught everything in the past right here. Remember, we talked about this being important. It set up everything from here on out. This 14K bounce off, rejection, and then look, hit this. It's literally, Gann said something, and I picked up on it a long time ago, and I can't figure out what it was, but like wheels inside of wheels. I don't know if you have heard the term. He's basically talking about like how the small movements create the big movements. And if people like fractals, there are ways that you can find fractals in like a 1 minute chart that are in the same thing as like a 1 hour chart. That's the type of thing.
That is basically the premise on this drawing, actually. To just give you a little bit of an idea, these angles, I can draw them on a 1 minute. I can literally take that line and go to a 5 minute or an 8 minute chart. Let's do that real quick. And the beauty about this is, so let's just zoom in there, and I'm probably going to have to go back weekly and just rewind to that zone, just to show you, which is to prove gone right, basically. So what I'm going to do is I'm just going to bar replay all the way there to where that line originates. And then what I'll do is I'll dive into an 8 minute time frame. I like the 8 minute. You were talking about different time frames. The 8 to the 10, the 15, those kind of things look really, really sexy to me. So where we're at right now, there's that 8 minute, there's the line. And if you now start using that, you can see the confluence. So this is a momentum. We tend to call it a trend line because you use a trend line tool, but it's not a trend line, guys. It's a momentum line. So you can see the significance of the value of these Gann levels, and the same levels from your indicator would be the usage. So what do we have here? Yet again, you can see there's a massive gap in price. There's the area. So somewhere in the future in time, the demand around that level will be the areas where you need to test. Now, whether that holds and goes up indefinitely, that's the question, the age-old question of trading that is normally very hard to establish. But there you have it, guys. So then you can run your replay and your fast forward. Where's my button now? So let's play this. But you can see the significance. Look at that, from these levels going forward. So trading becomes extremely boring to a point, because once you've mastered the idea of understanding that it's organic, and yes, it won't adhere to a line perfectly, you'll have these crazy wicks, but the recipe remains the same. It's always going to get you in on the good moves. And that's it. So that's why analysis doesn't make you money. Trading makes you still money. You still need to understand how to apply the analysis. But you can see the power of these things. And this is an 8-minute candle drawn from an axis from the weekly that was originated somewhere else. And you can see how it's sticky at these points. We can't engineer this. I can't BS you guys with these levels. And we can move this further up and say, okay, right, let's forget about how this thing is replaying real quick and say, there's your sticky points again. So where did we gap up? There we gapped up. So at some stage, as this thing is growing, we're going to hit resistance around that range. That's the beauty about Gone. So hopefully this thing fast forwards quick enough for price to go to those levels. Fingers crossed we get there soon. But you'll see that run. And maybe what I need to do is just move the line up. There. Let's see. This is the fastest speed we have. Okay, but you get the idea, guys. And I'm not trying to teach Captain Blackbeard this. I'm actually doing this to try and just put the context of what it is he's trying to say and the power of what it is trying to say in there. Okay, so oh yeah, and I'm on the wrong stage. If you said something, I won't be able to have heard you. So now I could hear you. Sorry, buddy.
Oh, I can
if you were saying something.
I'm good now. No, I agree. You're doing a great job kind of filling in the gaps, and that's good. You're more experienced in this. And to go along with your momentum thing, yeah, you're basically saying that the amount of momentum it took at point A is going to be a lot different at point B, like later on. A week.
Correct.
You're going to need a big push.
Yeah, so there, 17,000 was significant. There, 70,000, but not all 17,000s are created equal. And that's what a lot of people forget, you know, and that's the part about patience, which can sometimes, it can get the best of me. I get to screw it up sometimes. I mean, because it's hard. You're a human being. It's the reality of that. And that's why indicators sometimes help, because it allows you just to chill and let the dot do the talking for you, instead of you second guessing or thinking maybe I was wrong last week or something. And there you have it, guys. You can see the significance, and what happened there probably will now be repeated in there. You can see how it is respecting that. Now, where's the next area where the massive sell-off happened? There. So if this thing pumps, what we're going to do is we're going to hit resistance at these levels. And the market's going to keep on filling these gaps indefinitely. And that's the beauty about this. And yes, that is greed and people getting stopped hunt. But there you go. It's running through these levels and it's respecting that. So it's maybe going to take a little bit of time for us to get to that range. But I'm gonna let this thing replay and let you continue on with your train of thought. And then if you'll allow me, I'll interrupt you once we get above this level, to just show the guys as the closing remark that, you know, it's gonna, when we get there, it's gonna get sold off. Okay.
How are we on time right now?
We don't have any limits. You decide when you want to end it.
Okay, good.
This is an educational stream. This is not intended to grab views. It's not intended to do anything other than to give somebody that's really in need of some proper education and ability to sit through, take notes, go through this, redigest this, apply this to his own, and even ask questions in the comments if they're watching live, which is probably not possible for everybody, because I understand that we're doing this for a living. Most people still have a day job. So, you know, that's
right. Yeah. So like you were saying, this type of momentum and break here was promising. Here it was promising, but it was like, there's no way. I'm just happy to have it. But now I'm watching. At this point, hopefully, you're saying, when do I actually get out of this? Like, when do I call it quits on something that you've been holding from hopefully in these areas. Like for me, this isn't about that, but we're talking about this whole, we could pretty much draw a box around here and talk about where I loaded up. And so when I see something push like this through there, it's okay to be still excited about it at this point. But when you start seeing this, and then you understand that it's respecting it, and that's good. But this action here is completely different. Like some people be like, oh, I've seen this before. And they look at this. They look at something like this where we have a downtrend and then pop. And then we have a downtrend here, but yeah, it popped, but it was the opposite. And that's just kind of like the expectation that I've built in, that it's going to do the opposite of what it did here, because I consider this move a middle. And it's almost like if you were to draw a channel in this direction, it would probably bring a bigger picture to what I'm saying. I'm looking at something like this now, whereas this is the bullish, hey, this is what
the bullish version.
If everything's okay, this is what I want to trade. But I always draw these two. I never, you haven't seen it yet, but I'm always doing something like this and using my tools to kind of help me with that. And that's why I'm basically saying there's two ways to look at all this. All of this looks bullish to a lot of people. And like, when I post a chart, they're like, okay, only up, because these lines are going up. But that's not what that means to me. That means like when it fails this, I know something, it's all about like, does it respect it? What are my other indicators telling me that's going on right now? How are things going? And when it blew past this, it's already too late. So you better make decisions and have something that's showing you, like, think about what it's going to take to pop from here. And I'm saying, when I see something like this, I see lines like, I see this. I see a line here. I see a line here. And I see a line here, just like a channel, just like I wrote before. But that's just the way I look at that on my own. But if I put that into my charts that I shared, if I shared my daily trading charts, people, would go nuts. And I'm not going for clicks and likes either. I just sometimes think that, like, I wish somebody put this stuff out there for me. It would have made my life a little bit easier in the beginning to understand and be open-minded that there are more ways to look at things than the indicators that are provided to you on every exchange that you can just pop on there. There's something going on that's hidden in the background that you don't see. And I just think it's cool. And like I said, this is only just a 1 week chart. So there's and to go along with what you said, if I go back here in time, let me put auto on. If I go back in time here and start using some of these candles, like obviously when I first see this node cross right here, the first thing I always do is mark this. I won't do it right now, but just something I always do, because that is a meaningful spot. I'll just put it that way. All right. I haven't done this in a while. Let me see if I can kind of go with what you're saying. And this, remember when I was talking about GAN, talking about the first set of candles holds like a vibration or harmonic?
I wanted to still get behind you on that, what you meant by that, because somehow I missed it, or I read it and didn't quite understand it when I studied up on that. So definitely want you to talk to that.
Yeah, I'm still studying it myself, but I just always keep that core belief that the first candles, he was even talking about, from what I remember, and I can't remember where I saw this or read it, but he was talking about like the first candles, even the first hour of the candle broken into different parts can provide you a vibration or a harmonic that exists, that basically guides the price from that point forward. And it's going to be in multiples. It could be multiples of 100. It could be multiples of, and it's a little too much for me to try to break down here, but I do have the GAN fan built in to this too, I think you mentioned. I have the GAN, the auto GAN fan that is my version of trying to figure that out, and I'm working on it. But yesterday when I was talking about it, I was hoping somebody could help me get some more info, because I'm literally trying to break the code, and Joe's been really good about knowing that stuff. So,
Well, let's continue on then with the Gone fan, because I think we need to kind of see how we can then utilize this. So where we're at right now, let's dive into a more user friendly, I would say, for what we want to kind of achieve for
okay,
today's video time
yeah,
frame. So let's go into your your 3 hour or 2 hour, whatever time frame you would
okay,
suggest, and then we'll take it from there. So now we're applying what we've said, because there was a lot of theory now between these levels, and so how to physically utilize this going then forward. Let's do that, because now you've got a lot of dots. There's a ribbon almost forming between the red and the green lines and those things, because the weekly, what we've done up to now for the audience is basically just lay a lot of groundwork, which at some stage or some cases sometimes could feel like it's just repetitive or boring, but everybody's on a different starting point or a different level. So touching all the bases just to make sure that everybody's on the same page makes it easier when we deep dive, because then that's where the critical missing link, one little nut, if you don't have that, the thing falls apart. So
hmm
let's do that now. Let's start diving into this and take it in there. So now we've got the dots, we're looking at the chart. What do we do?
So the first thing where was this? Let me go back to default. The first thing I notice when I log in and I start looking, remember when I told you I like to look at stuff that just has a lot of alignment with the price? I really was just immediately drawn to this. Okay. I'll turn it off so you guys can
Okay,
see.
I'm gonna do the same then. So I'm going on to the 3 hour time frame on my side, and then I'm gonna chart along with you, so we can take it from there.
So
So
for
you're looking
me,
for areas where prices aligning to the trend lines, correct? So between the dots, where prices respecting both trend and the nodes, correct?
yes, and this happens to be two nodes, two trends that are doubled up, and they are, it just, when I see it, and like I said, this is a bit of an art, but once you get used to it, I have people who just are
Okay.
aligned with my thinking. I would definitely just at least do this, and then bring it down to your node, because bringing it here is this is why we have the nodes, to help you find the meat and potatoes where things actually are. Now, the other cool part that's going to help me immediately know that if this is a legit trend, I have another one here too. Let me see. Let me make this. See if I can get these thinner. And I will do. Okay. Another thing that helps me, look at this node right here, right in the middle. It just basically sliced it right in half. Now, there's nodes everywhere all over here, but I can just tell you that for me, as somebody who uses this a lot, that's going to add a little bit more to me saying I'm on the right path, if that makes sense. And
Can
then,
I ask you a quick
sure,
question on this while you're drawing this? Obviously, when we are where we are right now, we're using the most recent node,
correct.
but there was many nodes prior to that. So just quickly talk me through the thought process on those nodes leading up to the one now. So let's maybe go to, because we've got let's just go the axis of the channel as
hmm
such, and then there's the first node right below that. So what would be the thought pattern behind that, as
Well,
opposed to where we are right
I
now?
I always think of it this way. I guess the best way to decide, I can promise you that if you zoomed in on, and all I gave you was these two nodes, that you could probably build an entire chart from it if you were crazy like me. Okay, it doesn't mean that I just don't use them. It means that the longer they are, the more I like them. How about I say that? The longer the trend is between them, the more I like it. this for me shows that I look at these as more of, I would say, in the future, I can assure you on a 3-hour chart that these prices are going to be a big wall. And now tell me if this is confirming anything for you. 100, 101, like this is showing almost like a heat map vertically for me. I would use them more like that right now.
Okay, so when there's a grouping of the nodes around a specific area,
Yeah.
it basically points to a psychological, or whatever the case might be, a resistance support area
Yeah.
in the future. When we do get there, regarding whatever trend you're using, to consider the price action of the opposing trend, maybe if it's resistant or so forth.
Correct. So you can choose to do one or two things at every single trend. You can say, I want to use this as a level. Okay, I'll just use the nodes as a level. I'll use the trend, or I'll use the level and the trend if you want to. You can, but I have trained myself, and I might be wrong on this. I'm telling you, I learn things about this all the time. Let me just go to, let's just say I'll go to this. I mean, I'm learning this right now with you. This might be something that people can learn to identify these smaller nodes, but I always like the longer standing ones. And there's a reason for that, because when they connect, they both meet very similar conditions. That's how they end up connecting. And when they are farther apart and they meet these conditions, just because I know how the script works, it's more meaningful. I guess I can say that. Okay, when they're farther apart and they meet these same conditions, it's almost like it's not by accident. So I don't know how that's going to end up, but we'll take a look, see if that meant anything so far.
Okay. So let's get back to what you were looking towards. So because we have that angle we're looking at, and we're applying that to the specific nodes, we will use the node in the future as a plausible, let's say, demand zone, or an area where if you were going to go long, you would use those lines as your confluence areas for the long, correct?
Correct. Yep. Just like you can make channels off of this if you wanted to. I mean, right now, that's when I see one empty like this and not filled up. Where are my channels? When I see one here, look at that. See? I just use this one, hold shift, move it over, drop it down to the next node that you do have available, and it's going to give you something. And I would say that's pretty meaningful. We're just using channels now. So you could also just take this entire cluster and count it as its own zone if you want to. And here's a zone. Right there. So I pretty much have set up a chart that I would probably trade. I mean, I would probably, it's the beginnings of something for me. So instead of having all these lines here, you could literally do this, and this would probably show up more on a higher time frame, because they like I said, they're meaningful. And there we go. Nice and neat. That you can see this node aligns and slices this price action very well. I mean, if I wanted to, I could probably drag this, and everything should be considered like when you're talking about 3-hour or 2 or 4-hour charts. That is nice. See how that cut that off right there? You want to consider like, hey, this is what I'm giving you for the local price action. If this is valid, trade it, and if it starts to become invalid, don't. But because this is kind of like a different part of a little mini cycle here, I always kind of call it, or the wheels that turn wheels, if you will. But it's easy. It can be as easy as this. And I guess this other one right here just really aligns with it, so it doesn't matter too much. I mean, it just pretty much aligns with it. If you wanted to use that, it's the same thing. I mean, it's pretty much the same exact angles. But you can use something like this, and you could drop to any of these nodes and start. And if you wanted to, you could start building your momentum lines or your trend lines that we were talking about as you go. So you can literally build out a nice little trading chart right here that's going to work for you. I mean, I can guarantee that if you get this down pat, that you're going to be able to nail it. I just don't have the time like I used to do a lot of margin trading, but listening to you guys talk, it's like, oh, there's certain parts of it I miss. I do miss the good swings and being able to catch things, and being right is just so nice. But this can help you with patience, and this can help you, get something. Now, if this fails, which then you still at least have this at 83. And then if you wanted to start becoming biased a little bit, start moving things around, and it's okay to do. You can move this down here to this and say, this is my max for this being okay at 3 hours. This is where I say, and then at this point, even you can start. I mean, the 27th I've seen lots of little pivots on the 27th and the end of November. So, I mean, but a 3 hour chart's not going to give you those awesome ones. So you can build out a pivot chart on a 1 hour interval if you wanted to.
So the nice thing that I'm picking up from this, guys, just to bring up my chart real quick, I basically utilized what you were saying there now is, if we look at this from a pure supply and demand point of view, what we would typically say to ourselves is that a supply zone would be, and this is now smart money concepts, would be something like that. That would be the area where a lot of supply entered the market. Remember, we had Wizard a while ago, and he uses this supply and demand. Val calls them an order block. There's so many, different ways to skin a cat, as the saying goes, and Joe refers to that. And in the future, when we move to these areas, these supply and demand zones, it's how price reacts from them that gives us a really good indication of what we should be doing. Now, one thing for me, being able to see this and immediately know what to do. Another thing is for the new guy is which is then the right demand zone, or the right supply zone, or the right order block, or the right whatever you would do. So if I look at this and we look at where these nodes are forming, the nice thing is statistically, what we would say is because the nodes are there, what we will have from a Fibonacci point of view, and now I just need to get this, is that they will line up with hidden divergence predictions, meaning that would be the zone where you would typically see the reversal occur. Now, this is a wide zone, I know, but or the continuation occur. So if you have a trend that forms like this with a sea of nodes, where would you add to your short when price revisits those nodes for the continuation? And because we only have one node at the bottom, I would read this and I would look at this and say, well, that is a significant support level. And if we fall below that level, it opens the door for more. And if we zoom out into the past, we will probably at some stage find confluence around this level. Let me just try and get to where that will work. Confluence, now we don't have that, the angle is too steep, but we'll probably find confluence around that level with the previous analysis, this analysis, that will help you look for, let me just get to a weekly time frame, help you look for an area where support would be. So around these lines. So going back to this analysis, it then gives me a good framework to areas where I can go short, looking at the nodes, cluster of nodes, area where we can go short. And if we were to reclaim that cluster of nodes, area where I can go long again, to help me then not worry about this price action here, there, or that price action there. Because remember now, if you start drawing demands and supply zones, that's all you're going to see. There's so many versions of this, which one to pick. So I like the fact that the node then takes away the guessing for me in a way, because now I don't have to worry about which one it is, because the important ones, the ones that had the significant volume, the ones that had the significant price action and reaction, have been highlighted for you. So you can easily then navigate to this. And the first thing from a beginner point of view, guys, always say, what, where's support and resistance levels? Well, like you say, use the differences between the nodes, and that would be a resistance zone, or once reclaimed, a support zone. So I quite like that way of looking at it. And then as an added approach, like you just pointed to, when we look for the exact same angle or harmony between price and the bearish angle that we use to look for support for price, if we look for that, the only place that I can really find that is exactly where we're at right now. So I will use this then, like you say, in a similar fashion, and say, well, draw that thing and start looking at areas where resistance could potentially start kicking in. So looking for cluster of nodes, there's a cluster of nodes. And if we fall back into that range in the future, price could potentially hit these targets. And again, in a similar way, where would support be? Support would be somewhere there where there was a cluster of nodes. So you have the exact same analysis for your bearish thesis. How bad can things get before we jump? And obviously there's way more that we need to line up, but I quite like the node angle around that. So yeah, back to you. How do we take this thing a little further?
Okay, so some people will look at this and they'll say, well, that's good and all. You're kind of coming up with some of this information, now that you have it, which basically is every indicator. But for me, wanting something that gives you future data and future forecast for price action, that would be. So I'll use this one too, because remember I said anything that's kind of flat, and I built this on purpose. I built this on purpose and kind of filled these areas to kind of give you a perspective. I don't know what the 3 hours doing, and I haven't been able to go back and look at pattern recognition, but I do see that this is something I'm interested in. And it just goes along with what I was telling you before. So if you go here and you start moving up, let's go up to the nodes that we have up here in the top. If we see any that we like that align with previous price action, you can use those, because they're all going to be pretty good. They're all going to cut something off, I promise. See, this one goes through and cuts through some more nodes on the end, but let's just go here, because you see this spot right here that we're looking at. Basically, we'll go here. So you can take this and just drag down some copies. 1, 2. There we go. All right, there we are. Look. Now, so we have this midline. This is our original midline. Cut this off. I mean, this is a pretty good little area right here. I almost kind of pay attention to when the line is not being respected and it's just totally blasting up and down across it, and then makes one last little pump. If you can catch that and start realizing that these nodes are printing real quick, that's actually a pretty decent sign that things aren't going well. So that's another thing about here. I haven't had any others kind of confirm that, and they're all, that anything is, it's just a risk off for a lot of stuff. I mean, I have bought back in because I told you the reason why, but I'm not going crazy right now, but I'm not scared to death either. So anyway, so we see we did these. We got we have our, I'll go ahead and remove those because you just did you did a good job explaining how that works, just to clean things up a little bit. All right. So from that, all I did was take what the indicator gave me on October 29th of 25, October 29th. I moved it up to a node. I decided to use a node because I feel like this is where I think using the tops of wicks is where a lot of people mess up sometimes. And that's another reason why I literally built this, is because I just don't think that the top of a wick on a 3 is going to be different than the top of a wick on a 5-hour or 6-hour, 12-hour chart, whatever it is. I just want to know where the meaningful parts of the chart are. And balance isn't always where the candles go. So anyway, so I did that, and I just simply cloned it down to the last node, and it actually fit perfectly and somehow magically aligned with a node down here that's already in place. And I honestly, that all that does for me is just makes me feel better about this actual trend right here being very important. And you can keep going from there if you want. I don't recommend just saying, oh, that's, if you left that there, you may have a tendency of thinking like, oh, that's it. You know, this is the bottom. You know, I always, when I'm building out a chart and I publish it, I'll always add more until I get, I mean, it's not hurting anything. Just go ahead and put them there. Now, if you want to get crazy, you can always go in here and you can add more of your
quarter levels and your half levels.
Yep. There we go. So, and that's only going to help you too, especially if you're scalping. You know, you want to take profit real quick when you see something hit like that. Go for it. But yeah, so that was just one node, but I think that a part of it. See how that looks so nice. See how it's just basically cutting this whole thing up, and we're still on a 3-hour chart. It just really makes you realize where things are, you know, as far as the price is right now. And like you said, you know, 100,000 here is completely different than 100,000 here. You know, that's a really good analogy.
The price is never the same, you know, and
right.
And that's the main thing. So now that we have an indication of building the chart setup and you've got your 3-hour, what do you do from this point going forward? Because obviously having the trend lines, having the nodes is now part and parcel of what you need to. But now we need to consider factoring risk management, trade management, and so forth with this. So what would be your next step regarding that now? Because do you just buy when it's in the blue zone and sell when it's on the next blue line? How do you now take this to turn it into a trade strategy now? Because we've now done the analysis, we kind of know where the significant levels are. You know, now we need to physically go and buy on the exchange. How do we use this?
For me, I'm extremely conservative. But if I had this printed up and I saw all of this happening, I would have definitely been in this area. And when this printed up, I would have been happier with my decision here. Let's just say, you know, when this node was created and printed up right on this line, because I remember I made this before any of these were actually here. I just took this and copied it down. I used the possibilities up here in the node, what the node gave us, what the node trend gave us, and I just copied it down. I would feel pretty good about this. I'm not necessarily, what is this? There we go. For me, I would say that I would treat, on a 3-hour, I would treat this really well. This coming up and not necessarily reaching my spot, I'll just tell you what I would do. I would probably switch somewhere around here immediately if I was scalping and trying to because it just didn't reach it and it started petering out. I wouldn't feel good about it. I would just start paying attention to this line or not do anything if I was just now looking at it empty with no, bare. If I was risk off, I would do nothing right now. But that's just me. I'm very conservative. I would wait for something to happen around here. Wait for some more nodes, or I would actually go down. I mean, I don't know why I didn't think of this. I would go down until I started seeing more. Let's see. Let's go to 30. Yeah, so now we have some that are actually going up, and that's going to help you. And another great thing, we have an intersection between two actual node trend lines right here. So I would mark that this right. It's hard to say, but somewhere right around here, there's an intersection. So that's going to be if we're trading a 30-minute, 1 hour, even a 2 hour, that's going to be important. I would go down and I would work my way up. Here we are. When it broke that line, when you saw this print, well, you wouldn't even have to wait, because you could literally take this and use it as a 1-to-1. This looks very similar to what we're looking at on a weekly in a way. You see how it broke this 1-to-1 right here? And then as soon as it did, it just kind of cascaded down. So I would just treat these lines as very important, these two trend lines for the resistance, and then hopefully future support. And you could probably make a channel from this. You could probably make a channel from these. That's just how I would play. I haven't traded. I really only look at lower time frames to figure out what's going to happen on like the daily or weekly, and then I use the weekly to figure out what's going on in monthly or 2 weeks or 3 weeks. But
so to put this then, with this being said, this is still basically what you're in an analysis zone. So you have not really actioned any setups or any trade setups. So the question I'm kind of asking is, what would need to print for you to trigger a buy?
And are we talking about to get back in? Let's say I sold a lot in like above 115. Or are we talking about like a daily chart? I'm
talking your system. So
okay.
What would need to happen now? Because we've now gone through the theory behind the indicator in as much detail I think we should. And we've looked at the significance of the angles of gone. We've looked at the significance of the confluence of nodes grouped together. We've looked at the significance of the trend lines between the nodes and how that can be used to determine future points. And we've looked at the crossing between the gons to give you an indication of time events that could happen as well, because that focuses. Now we have that, and we kind of built a chart out here. So the question that I'm asking you basically is, how would you now, what extra, if there is anything, needs to happen on the chart for you to actually physically press the buy button or the sell button? Depends on what you see.
Okay. Yeah, so I'll break it down and try to make it as easy as I can on that one. I would say I'd be watching this line. Remember how we talked about it looks like only up if you have
correct. Yeah. If you draw any up lines, yeah.
I'm already looking at how it happened here. I would look for something like this. I would look for something like this to happen. I would wait for it to break this with some kind of momentum and using other indicators. Hopefully, time pushes things right no matter what we do. And sometimes it's what forces things to make the moves. So as if it was to stick here and then get, pinch down and start building something here, I would look for this. I might give it a long to see. I mean, if it breaks up with some momentum, I might give that a long and then I would play this. I would play these 1-to-1s that I made as resistance, you know, and I would probably, I mean, if I was doing some swing trading, I would probably do that. This is what I would play. And your higher levels are also going to help you too. But if I was stuck on a 30-minute chart, sure, I would probably do something like that. I wouldn't have a problem playing these lines as if they're very, serious, especially when you see them. If it came up to here and we have this line from our, what was it, our 3-hour chart that's here, that's still connected to this node, and we still have these 1-to-1s from our green and red, I would say I probably would reduce. That's just me though. I would reduce the spot, or I would short. And if I'm wrong, so be it. Win it next time. Because overall, I still don't think we're over going down. I just think that, like, if I was to look at this chart, this is where I'm literally interested in everything below this line. I mean, it's lower on a weekly chart, but that's what I would do. I would play it like this. I wouldn't do anything right here until this thing. You can see that it's meaningful because the high is just bouncing right off of it, wicked right to it. It's probably going to do the same thing. It could literally. I mean, it could literally come all the way down to here before it decides to make a move, because it could drop off of this, bounce, come up here. And at that point, if it's still respecting this line an awful lot and we're getting here and other indicators point to up, then I would probably wait for something like that. That's just me, though. It's hard for me to discuss what I would do if I was somebody else, because I'm just so used to the way I do things, and it's so much more long term. But if I was looking at this like a weekly, I would still wait for it to go down.
So basically, what we're trying to achieve here is, if I bring up my chart, we're trying to see whether we're going to stay within the 1-to-1 relationship.
Right.
And what you would try and do is, if we break down and we respect this trend and we start falling below these rays, that is when you're going to start getting interested. And if we fall below 84, that's when you would want to try and action your short, if I'm correct.
Yeah, I probably would. I would probably expect something. For me, I'm buying spot, so I'm going to be interested in buying below that line. But if I was to bet, I mean, we're looking at right here, a 30-minute chart under 83. If you like that kind of action, I wouldn't necessarily say, hey, oh, this is going down to 50. But I would bet, I'd be willing to bet that it might test the 70s, the high 70s, somewhere around here, 78. That's just probably where I would be. This is still a 30-minute chart, but you could probably use something like this, because this is where I think that we could go before we pop again. And I have a lot of interest in spot at 78 just to see where it goes. But that's where I'm at on this. And I know I would play these until they're invalidated, because that's the chart I was given. 3 hour, it's going to give you this, and take it. Take what it gives you, but don't expect miracles, long term for a 3 hour chart. It's going to give you what's local, and it's going to give you this. And then when it fails, it's pretty much done with that until it starts printing nodes that are useful again.
How would you go about placing a Garn fan to the downside?
Okay.
Because you now have your 1-to-1 from a bullish perspective. Would you apply this from a bearish perspective? Would you then use those angles and see whether the market respects them, or what's the next point then?
So this is where people that are familiar with GAN, that like there are ways, and now there are ways to do it. You can just simply go to a top and use the nodes for alignment until you see something that you like. Okay, you can see something that aligns. I always think there's a little bit of bias in that, but you can just use the nodes, and you'll see that there's really no wrong way to use it. That's because I made this that way. So you can go from this top to here, and it's going to give you tradable lines. And now, if you the way I was talking, the way I envisioned how I would trade this is probably something along this line, where you're looking at how every line reacts, and it has to literally beat this. And I will tell you that the steeper the line, the easier it is for it to build that and pop up, I've found. Okay, so when you have these nice, long, beautiful, lines like this that are easy to kind of stay in for a long time, what happens is they get to a point where they reach their bottom or their local bottom. They reach them, and they have to pop. So that's kind of what happened here. You can see it. Always take that into account. The time moves on no matter what we do. It doesn't stop for anything. Now, you could probably, there we go. I mean, the same thing. There's your 1-to-1 from a downtrend perspective. Pretty easy. Can do that. And it's pretty much the same exact thing that we were looking at before. It's just right now, no matter which way you cut it, it's hitting an area that is pretty easy to see that it's important, but it's going to be hard to breach. I mean, it's basically at a double 1-to-1 from this perspective. Even if I just drew a trend line there, you would see that. So there you go. I would just call this the most important line that you need to watch if you're going to trade this if you're going to scalp it or you're going to trade it intraday. I would just call that line extremely important and trade off of it, see how it reacts, look at your other indicators. But yeah, that's basically what I would do. A good thing to do is to put the center your second node and then go to your other points, and you can kind of see where you're at from your other highs, your other lows. I mean, there's many ways to do this. Okay, this is what I was telling you about. Do you see how there is no trend line here, but there is a fill?
Yeah, that was the next part that I actually wanted to start talking about.
Okay, this is like the next level up, but yeah, there you go. You can use that as well, and that's basically that was built in something I'm still kind of testing. I kind of added that onto this newest version for that reason, to where you're never left without something. Now you see we have a new 30-minute candle that just printed, right? What are the chances that it's going to go to here? I mean, or here, and then fall back down, and then that's basically what I would start watching. I would just, a big part of using this is back testing. But yeah, I would, if this was a weekly chart, I would just be paying attention to this line. It's pretty simple. I would just be paying attention to this line, how it breaks through with momentum. I guess you could watch your volume. You could do a lot of things with that. And then there's different ways that you can use for downtrends. You can use that's a little tiny little thing that it gives you, but I can make that much bigger if I wanted to. But it's just like if you were into that type of macro zoomed in trading, lots of different things that you can use, and use these for that reason. So there we go. So there you go.
Awesome. So to conclude basically where we're at, I don't know if there's anything else you would want to talk about for today's stream regarding the nodes. They're really good sticky points. They help us achieve our Gann angles, try and identify true angles or hidden angles. And we can use them to identify good demand and supply zones or order blocks, as opposed to, ruling out each and every red candle between two green candles, that kind of thing, because you can suffer from analysis paralysis in that regard. And then we also have a nice, good idea of where it's going to be within time into the future, because if you look at it from the macro view. So do I have that basically summed up correctly?
Yeah. It's easier for me to show you how to use them than it is for me to show you how to trust them and trade them in a way. For me, like I can show you how to use them to build a chart, but the problem I'm always going to have is telling somebody how to trade. It's not my specialty. It's more of a feel for me and something that I developed. And you got to remember, this is a tool that I made for myself, and I probably built it for the way that I wanted to see it and trade it, or the best that I could, considering the limits that I had. But yeah, I think my main goal is to kind of just show somebody that there are so many different ways to look at this. And then another thing I wanted to show you real quick, and as part of that is using a sign. Here we have, I just use the same weekly node right here. Now let me show you a different concept for how I think things sometimes flow. And we're talking about harmonics or vibration or whatever you want. When you use this, you can see that there are, let's do that. See how it captures the price and has a tendency to give you a different visual than you normally wouldn't have, maybe, on just how the price flows. It's more along the lines of me showing you how these work for, showing you price flow. You see how that line's right there, like so nicely. See how it catches this. This had nothing to do with this bottom, but you see how it caught this. Let me get it there. Like you can't tell me that this is on accident. How it catches this, bounced off of it, captures all of this and everything in this form and fashion. I know it probably does nothing to do with how you trade, but I think it's amazing how it works. And that's why this is an important time.
What I'll do is I'm going to definitely look in on that a little bit further. So I quite like that part of that. So you use your shine line, and you're using the upper and the lower points of the node, and then you can use specifics regarding the highs and the lows, but you need to be able to pull it up vertically. I don't think you need to move it around to kind of pick up
right
on that. Okay.
Yeah, you just want to hold shift. You want to copy with control, hold shift, and just move it straight up. Now there's a way that you can use it to, where you see, let me zoom in right here, where you see the price breaks the trend right here, this new node trend. If you place it there, it's going to give you a little room to, and then the node right there. So let me do it here too. Watch. We'll see. See if I can get it. There you go. So if you pay attention to how the price interacts with this actual node trend, you can start placing them like that as well. See how it breaches right there. And that, again, people might think, well, that's, let me see if I can get, you can also do it with previous nodes as well. I mean, if you can find alignment with previous nodes that are important, you can do that. You can put them on different highs. You can put them on this 2017 high if you want. You see how it captures the price. Now, I always think this is kind of amazing that you can get something like that. And I probably shouldn't have even shown it because it's kind of pointless to some people, but I think it's really defines what I'm trying to do here with these nodes and showing you how you can use multiple tools. You can use just about anything. You can use just about any tool, any Fibonacci, anything on it and get something. And that's how I built it.
I quite like this. I'm going to play with this. So I interpret it a little differently. But using the same thing, I was using the retrace the high and the low on the basically the last wave,
Okay.
and to try and pick
Oh
up,
yeah.
and you can see the significance around that. So it
Oh, you mean
opens
it
the
can
door
jump?
up to your interpretation. And for the audience, let's just quickly do, I just want to show you guys how to do it, because otherwise some guys are going to say, okay, well, okay, great, but how do I get there? So with the indicator on, just on the basics, so you've got the node, you're going to get the thing there within cycles. It's a cyclical indicator. And then what I used is I use that and that to try and look at where the highs and the lows of the chart was vibrating. And I mean, if this was where we were here, I would have used that and that as well. So as the market is speeding up and the vibrations are speeding up, that's always things that's going to be in the future be something to take note of. So now you've got the highs, the lows. We can probably, I don't want to change the frequency there. We've got the highs and the lows, and you can see in the future it's going to give you your significance around that level and where we are right now. You're going to have similar confluence. So it's a basically it's a very powerful indicator for you guys, for you to find confluence with what is currently happening. So I'm using that as a level, and now we can use this node as our probable next level on the way that I've looked at this. Sorry, I keep on pressing the wrong shortcut first there, and then again bringing it over using the highs and the lows there. So there you have it, guys. So you have a really good indication. So if we start falling in between these levels, area of resistance will be when we hit that range, and you have a good indication of when in time it's going to do that. And yeah, it gives you an indication. So I quite like this. There you have it.
Yeah, it's really nice. And as I was mentioning before, do you see how you have the downtrend in your sign up there at the top, and how literally the top is right in the middle of it? It's dead center. It's center line. So this goes to my next point. And like I said, I told you I'm a weird dude. I got a lot of different thoughts, but you'll see that the price is going to react completely different. It's going to be able to break through. Like, you just have the green line exactly like what I'm talking about. If it goes below that line and then passes through that, and that node is literally anchored, that entire wave is anchored at the right point, you'll see it pop just like it does every time here. Like when it breaks through it, and it's going to have an easier time of doing that because time will pass it through there. Time will push it through. But this has to do with vibration.
I think I've missed what you said now. Just talk me through it again.
See your green line there, how it drops, and then your green line that you drew. Your neon line.
This line here, yeah.
Yep, that's what I'm talking about. Do you see how you have that there, and it basically falls below that sign, and will build pressure. It's going to have an easier time popping through and building pressure, and then it's going to literally, if this was to happen, and I'm not saying you're the exact line, but that's what's going to force it through to push up and like build a wedge or whatever you might call it. And then when time forces it to go through and demand holds it up, it will pop and push through. It's going to have an easier time doing that than if it was on an uptrend. I hope that makes sense. It's hard for me to describe it to you, but
and I understand what you mean by that. Typically, what you're trying to do is, and that brings us back to the Garn fan basics. We want to break these levels. If you're from a bearish point of view, these levels would be very strong support, but when lost will give you a massive reaction, as opposed to these levels, which is weak support, but if lost won't give you a necessary and massive reaction. So it boils down to those principles, correct?
Right. And yeah, it's same goes for this. You have the same principle. Have you done the 1 week on that long red one there? Is that the one that you just did? I just did it online.
I used the previous two significant nodes on the retrace. And what I want to try and do is I want to align this with a time analysis using the time fib zones. So, to
Okay, well,
find confluence around those levels. So we want to try and see if we can get, say, you're going to have a 1. I want a 2 because 2 is going to be significant on the largest scale. And then what I would want to try and do is see if I can get a 3 and a 4 in there as well. This is now the Garn boxes, guys. This is now just applying segments of the Garn box. And now you can see, looking at the node between the time of significance, there you had 2, there you had 3, and there you have 4. And what you want to try and do always, guys, and this is where Garn confuses the shit out of people, and why I on YouTube, when I do YouTube with you guys, use other stuff than Garn, because it's so widely open to interpretation. At some stage, it can almost be saying, well, if you draw enough waves here, Rudo, again, and if the indicator gives you enough nodes here again, you're going to find something that fits your narrative. But at the end of the day, it's not the fact that it gives you something that fits your narrative, but it allows you to act from a confluential point of view, which means that if there's a significance around the way that I've drawn the chart and looked at the way the market is vibrating, if there is the significance around this, the assumption is apply the next one. Instead of 4, let's apply a 5. By the time that we're going to get to that line, whether we are at highs or lows, there will be a significance regarding price movement again, like we had there. We build a base. Yes, didn't pump on the exact candle, but it pumped leading up to that point. We built a base again, and we're building a top there. And this gives you an edge, not an edge necessarily from buying and selling, stop limits, this typical buddy indicator kind of giving you a setup. But what it will do is it will give you an edge in the sense that now you can have an expectation management. Because we are on the weekly and buddy is turning orange, trend wise, just showing you the trend is turning. Upside moves like this now should be seen as bearish moves as opposed to bullish moves, because now the momentum is shifting, and any fast pumps like this, say we break this level, go into this range, and you're looking for maybe divergences, hidden bearish divergences, there will be confluential factors that kind of tells you to not wait for maybe 111, but maybe be, act a little bit earlier, because we took longer to get there. Because now the key is, if we pump now, the target area where realistically we're going to find our next zone of support would be much higher, as opposed to staying in this area for longer and climbing up the steps. And that's basically the principles of how the fib circles work that I use. And guys, this is how I got my 125, to be honest with you guys, by applying the retrace, building the block on further, and getting to those levels based on this. So it is a lot to wrap your head around. And I saw some comments when it's, I'm a little lost. And Ray, it's fine to be a little lost. I don't know if you're still watching. I know there's no disrespect intended. It's never the intention when we do these YouTubes to hey, if you're lost, you're lost. But that's the nice thing. You can always watch it again. But at the end of the day, it's to find a path to confluential analysis that will give you an edge to what other people won't necessarily be looking at. Because in the end of the day, being a contrarian doesn't mean not to be bullish when the market is clearly bullish. That's the biggest mistake it makes. Being a contrarian is to know when that pivotal point could potentially occur, and then looking for the right signal within that range. I hope that puts it in perspective for you guys. And if there's any comments or questions, about 200 people watching live right now, let me know. Captain Blackbeard, anything else you want to add to this?
No, I mean, I could go on for a long time. It probably, like, you just get more of those comments, though. And I'm okay with it. I get it. I understand. I'm not silly. I get it. It's not easy. And that's
But
why.
gone is never easy. That's always the problem, you know.
No, it's not. And I could show you a lot of different ways to use the fib tools and other things like that are kind of amazing. And it's weird because we're I ended up on a lot of the time frames that are pretty much default, like weekly and such. But I wanted to show you. See, I used this recent trend line to build a sign, and then you can actually move this down to as you go to help you see if that's a. So I would say that is. See how it aligns with all of this as well. And then we have this right here. I wouldn't be surprised if I was to guess that 79, like I was saying, 79. That would pretty much fill everything up. That's about where I'm at, 79. As far as wow, that's going to be good for me. I'll be all over that. But anyway, yeah, just to show you some other ways. I don't know how useful this is to other people, but I would find it useful to know that there's another way to look at things. I have
I quite like this. I like the way it analyzes and gives you a little bit of an edge over looking at this. So, yeah, I think that there's a lot that can be taken from this, and obviously, I think what we need to do is play with this a little bit further and see what else we have. What do you have there? Private teaching chart. So let's have a look at that.
Oh, okay. Yeah. This is one that I made. Let's see, right here. This is about when this is the same indicator before I isolated the nodes. So it has the nodes built in still, but I had other things in it that really just confused a lot of people. So I just never use it to show anymore, show anybody. But you see, this is when I built this one out, and it was just using some cross-reference stuff. If I was to still, so this goes to show you that I was using this weekly trend right here back then even, and it's like, what's the point? Well, this is the reason why, because if I extend these out, I think I even have it. I have it right here, the next page. I extend these out, and we're here. We're where we were talking about before. Now, this is probably something I just, I don't even know if you want to get into it, but this is the original D-Web with, I call these strings, and it's a whole nother thing. It's basically something that I trade in. But there again, remember, even back then I was talking about intersection of two major pivots, cross-reference the intersections, I'm sure these intersections with that price. So cross-reference this node to the trend extension where they meet up. I think I remember how to, a lot of my stuff is cross-reference, and I'll show you another chart where that is. I'm not going to go crazy, but I will show you. This is probably one of my favorite charts that I trade, and I actually shared too. If you can see right here, that's October 7th, marked out in advance. The line that we're on right now is valid. This same trend line that I have here, everything I marked out, this is something that this is kind of what it looks like on my charts when I start building them out for myself, and I don't normally share them very often. The original is right here. I actually, you know what? I have it open, I believe. Here. Yeah, here it is now. Just to kind of give you guys an idea of what things look like, when it's done, and how I kind of use this to build it out. And now you're an architect, so I'm assuming that this would be something that you could do. You see, I basically turned this into, by cross-referencing these lines right here. See all these intersections down here. I built vertical lines, cross-reference those. There's a match right here. I can remember this, it's because I do this a lot, and basically built a square right here, and then that line actually goes through it at a 45. So I do all these other things to build my own confluence because I can't look anywhere else for that for me. I can't go to anybody else necessarily for the type of confluence that I want. I've been in a bubble for so long, avoiding other people's opinions, and I don't know if that's right or wrong, that I kind of built in other things to make me trust the chart more and more and more. The more things that align, the more things that, like we just did that sign line. And when you see things like that align with it so well, it lets you know, like, yeah, I'm on the right time frame. That trend line is super valid. I can use that for other things. So
Well,
yeah,
there you have it. Well, I quite like that. I think what we need to do is maybe on the next session unpack that, because I know that there's going to be a lot of meat that guys needs to chew through from today's stream,
yeah,
and then we'll continue on this and build on this going forward. What do you think?
sounds good to me. Yep.
Awesome. Right, guys. Thanks so much for taking the time going through the crazy that is gone in a way, and understand that you're not going to master this in 5 minutes, because it's not the simplicity of trend lines, but it is the stuff that gives you an edge. This is the stuff I use in the background, because on these areas, critical levels, dates I'm looking at November 2026, November 2027, in the future, and the fact that we're bouncing off critical bullseye areas. If we fall through this, next target's going to be there, and it's going to be bloody. So you don't want to see that happen. The golden band will probably be in the future the area where we're going to be chopping and ranging around. So I'll be looking to add shorts there. And when we go through these significant crosses, say we lose our 1-to-1 and we're below a specific timeline, so we get there and we fall through, that would be a crazy trade for me. And so it is something gone, is something that you guys need to be able to digest. And I like the nodes for the reason that it allows me to not second guess whether I need to move the box, because gone, in a way, like fib, you could argue once you have your system, do I need to use this high to that, or is it now that high to that low, or do I use this? Because you're always going to find something that's going to want to work for you. And the nodes take away the guessing. It gives you a fixed point so that you can have a controlled point. And if you use the buddy indicator in relation with the nodes, it's also a really good confluential tool, because once you start getting these nodes, and let me maybe just clean up this chart real quick, because there's now a lot on it. I'm just going to do this. Once you have the nodes, the green nodes printed, you take the longs as long as it's in confluence with the nodes, and you keep trading in relation to that. And can you see how we're getting confluence around this area? So more time needs to print in order for this thing to create a bearish node as such. But at that stage, the buddy indicator will probably be giving you hidden bearish divergences instead of hidden bullish divergences for you to act on. So it does have a lot of validity in that regard. And remember now, if you say, well, that node's new, we can use these levels in the past to help us guide ourselves through these areas. Okay, so buddy indicator and these kind of things gives you a lot of confidence around that. Okay, there you have it. That's it. Anything else you want to maybe end off, closing remarks on your chart?
No, I'm good. I'm good with everything. I appreciate you lending me your audience, and I hope that it brings some light to other ways to chart and trade. And I know, for me, like I said, I see the comment where it says, sounds like it's flexing skills and charting, but isn't drawing anything. So I agree. I understand. I don't share my trades very often, and I'm definitely not good at doing that. I admire your ability to do that, and I admire Joe's ability to do that. My trades are a little different, I think, than other people. I have some experience talking to people about my trades or how I trade, and they misread me, and it did no good. So I just don't
read. Like I said, there was no disrespect in any case.
Oh no,
Nobody is. And in the end of the day, I have done stuff and shown charts where people were saying to me, "What were you smoking?" and it's one of those things. But Garn does have a lot of power, and I like the nodes because the principle of the nodes is to help you. It unlocks the door for you guys to start exploring with the Garn and the possibilities that run with that. So
Right.
there you have it.
I agree.
So if somebody is interested in getting or using the indicator, what would be the first steps there?
They can contact me on. It's just as easy on TradingView, which is linked in my Twitter on my X account, or they can DM me through X, and that's fine. I also have a Discord. I am trying to be better about that, but I have a group of current users who share their works on there, and I actually share some of my stuff. I'm not on Joe's level. I would love to be at some point. Right now, what I do is I kind of just share some added charts that I have and notes. But really, those guys have been waiting for me to make videos, and I'm going to do a better job of that from now on.
Okay. Well, there you have it, guys. There's his Twitter handle running on the bottom of the screen. Go and follow and connect with him and start exploring this. Thanks so much for today, Captain Blackbeard.
I appreciate it.
A lovely day. You did an awesome job. Regardless of what you think, the reality is this is meaty stuff.
Yeah.
And and in the end of the day, if it's I like the challenge when it's something I don't understand, because then it means this is where somebody else would quit. So if you don't understand this, look at it like that. This is where the average Joe would quit. And we all know that we're watching this channel because we don't quit. Okay, there we have it. Have a lovely day. Thanks, Captain Blackbeard.
Thank you, everybody.
We'll be back again with more educational content coming on Tuesdays and sometimes on Thursdays, this time slot. Cheers, everybody.